Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about the retail landscape, how it's been struggling. Recently, numbers shown for US retail sales plunged 16.4% in April, which is roughly double the prior record. So those numbers were higher than expected. And you can see that in the news, retail space like JCPenney, J. Crew, Neiman Marcus goes bankrupt. So it's closing stores, filing for bankruptcy. And as people don't shop in stores as much, then there's a lot more overhead, but people are not going into stores. And even though that these retail space have online presence, it's still not doing well relative to its competitors. So going back to Robinhood, taking a look at the ones that have physical brick and mortar stores, those are the ones that are struggling hard because they have a lot more overhead, that they have employees to manage, but people are not going into those stores. But the retail space, the retailers that are not struggling are the ones that have a strong online presence. So let's take a look at Amazon, ticker symbol AMZN. Amazon currently is priced at $2,400. Past year up 27%. So you can see it spiked a lot since mid-March. Past 5 years up 454%. So very positive trend upward, and there's a lot more potential upside. Scrolling down a bit, market capitalization is $1.2 trillion. So it's one of the $1 trillion companies, valuation, just like Microsoft and Apple. P ratio is 114 and there's no dividend yield. Now the P ratio is really high, but it's priced in with all the growth opportunities and potential with not only the e-commerce space, which takes up 50% of online sales in the US, but there's also growth from the cloud business side, so AWS, Amazon Web Services. Scrolling down a bit, in terms of analyst ratings, 47 analysts rated Amazon, 91% give it a buy rating, 6.4% hold, and 2.1% sell. So I think Amazon is a good long-term position to hold. Taking a look at another retailer, let's take a look at Walmart, ticker symbol WMT. Priced at $125 per share. Past year, up 22.36%. Past 5 years, up 60%. So Walmart has also been doing very well during these times. It has a strong online presence. It also has of course, physical space, but Walmart has a lot of the essentials that people need. Unlike JCPenney, J. Crew, Neiman Marcus, those are all clothing retail space. Walmart has a lot of consumer staples that people need to buy. So that's why it still holds up well. Market capitalization is $356 billion. P ratio is 23, and it pays a steady dividend of 1.75. Taking a look at analyst ratings, it also has a very strong buy rating from the 33 analysts that rated it. So 73% give it a buy, 21% hold, and 6% sell. Taking a look at another retail stock, let's look at Shopify. This helps businesses set up an online presence. Currently, it's priced at $766. Past year, up 183%. 88%. Past 5 years, up 2,636%. So very strong growth stock. It doesn't pay any dividend yield. P ratio, it doesn't have. And market cap is 91.59 billion. P ratio, I don't think this one's accurate, but Shopify, it's definitely overvalued in my opinion. And it still has a lot of potential upside, but at the same time, I think that it's very overvalued. Analyst ratings, 41% give it a buy, 50% give it a hold, and 9% give it a sell rating. Now let's look at the international market. Taking a look at Alibaba, ticker symbol BABA. Currently priced at $204. Past year, up 14%. Past 5 years, up 135%. P ratio is 21. Market capitalization, 546 billion, and no dividend yield. I think Alibaba was fairly priced with a lot of potential upside as well. So out of the 57 analysts ratings, on 100% give it a buy, 0% hold, 0% sell. This is very strong in the Chinese market. And it does business internationally, selling its products all over the world. Last but not least, let's take a look at JD.com. Ticker symbol JD. One share is priced at $50. Past year, up 67.44%. Past 5 years, up 48.97%. This one is market cap is $63 billion. P ratio is 40, and dividend yield, there is none. So all profits are reinvested back into growth. Taking a look at the analyst ratings, 46 analysts, 87% give it a buy, 13% give it a hold, and 0% give it a sell. So to reiterate what I mentioned, the retail space with a lot of brick and mortar stores are not doing as well, especially the clothing ones, the clothing brands, JCPenney, J.Crew, Neiman Marcus, a lot of overhead, and relative to their revenue, it's not keeping up with the cost. Definitely outweighs what they're making in terms of revenue, and that's why a lot of these stores are filing for bankruptcy. But if you look at the retail with a strong online presence like Amazon, Walmart, Alibaba, and Shopify, which helps businesses create an online presence, those are the ones that are doing strong in the long run. And during these times, that's when people want to shop online, don't want to go to the physical brick and mortar stores to get their products. That's all for this video. What are you doing in terms of your investments? Comment down below. Remember to use more referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.